Main market-bound Mr. DIY Group's retail portion of its listing exercise was oversubscribed, but by just 0.07 times. The home improvement retailer's IPO is Bursa Malaysia's biggest listing of the past 3 years. However, its institutional offering of 779.96 million shares was oversubscribed by 4.71 times. The total demand for both the institutional and retail portion represent an oversubscription of 3.91 times. For the retail portion, Mr. DIY said it had received applications for 169.94 million shares worth 271.9 million ringgit from the general public. It is slated to make its debut on October 26th. To recap, Mr. DIY is looking to raise 1.5 billion ringgit from the listing, of which a whopping 1.2 billion ringgit will go to its promoters, while the remainder will be used to pay off debts and listing expenses. At an issue price of 160 per share, Mr. DIY will have a market capitalization of 10 billion ringgit, which makes it more valuable than Malaysia Airports Holdings and Post Malaysia combined. It plans to have 900 stores by end 2021. Digicoms' third quarter net profit fell 9.9% year-on-year to 320.76 million ringgit due to margin slowdown compounded by COVID-19 and higher depreciation cost. The telco said that its revenue for the quarter, in contrast, grew 1.1% year-on-year to 1.58 billion ringgit on the back of proliferated data monetization opportunities and increased prepaid voice usages. It declared a 4.1 cent per share dividend. On outlook, Digi said the industry will continue to face unmatched headwinds due to the third wave of COVID-19 and its uncertain repercussions on the economy. As such, the group is tweaking its 2020 guidance to reflect this uncertainty, especially considering the impact of the conditional MCO on its physical stores and channels. In a separate statement, CEO Elben Murty noted that in the third quarter of FY20, Digi expanded its range of innovative and value-driven offerings, launched fibre broadband nationwide to serve more households, and modernized its distribution and network capabilities. He added that the group will remain focused on financial resilience by prioritizing investments in strategic areas. Taiwan Stock Exchange-listed Wistron Corp is said to be finalizing a deal to acquire Western Digital's Malaysia factory in Sungai Way Free Trade Industrial Zone for up to 150 million ringgit. Sources told the agemarkets.com that the facility, which was put up for sale 1.5 years ago, might not be redeveloped and instead will be used by Wistron to carry out new business activities. Wistron, which is a major original design manufacturer in Taiwan, was established in May 2011 as a separate entity from Acer. Back then, it was tasked with operating certain businesses of Acer's, specifically for the design, manufacturing and services division. In March 2019, Western Digital announced it was disposing of its hard disk drive manufacturing facility, after which it ceased operations in Petaling Jaya in end 2019. The move came on the heels of declining long-term demand for HDDs. Western Digital still has manufacturing facilities in Penang, Johor and Sarawak. Paksan Holdings is venturing into property development and has inked an agreement to set up a joint venture in Jiaxing, China. In a filing with Bursa Malaysia, Paksan said its indirect wholly owned unit Shanghai Shengrui Commercial Management had entered into a deal with Hongqiang Real Estate to jointly locate suitable land bank in Jiaxing. Paksan says the formation of the JV will not impact its FY21 earnings and net assets. According to Bloomberg data, the department store group has been loss-making since FY16. In FY20, the group's after-tax loss more than tripled to 427.28 million ringgit year-on-year. Paksan has also shuttered several of its stores since 2017 amid the tough retail landscape. Malaysia's unemployment rate is expected to shrink to 4.5% by December with the implementation of the Human Resources Development Fund under the National Economic Recovery Plan. According to Human Resource Minister Datuk Sri M. Saravanan, the country's unemployment rate stood at 5.3% in May but dropped to 4.7% in September amidst the COVID-19-induced economic crisis. Launched on June 22nd, the Penjana HRDF initiative was implemented to help address the issue of unemployment as a result of the pandemic. Under the program, 5 schemes have been introduced, namely Training and Placement, B40 Development, SME Development, Industrial Revolution 4.0, and Gerak Insan Gemilang.